All right, let's try it again. Please let me know if you don't hear me. How are you gonna know? I guess I'll type it. It's good. All right, sorry about that. I kind of know what happened. All right, so I think Google Chrome needed update, which is whatever. And I don't particularly love Google Chrome anymore, but the YouTube stuff tends to work better on there. So at least for me. And then I use like a drawing tablet when I'm doing my animation stuff, and it has an HDMI hookup. And that HDMI hookup, as you guys know, HDMI can transmit sound. So I think sometimes it screws with the audio drivers on my computer. And for some reason, even if I unplug it, plug in the USB mic, it doesn't always like to work. If I were really professional, I'd probably just get like a switchboard or something. But I don't have one. A long time ago, I set up like a 16 channel thing on my computer so I could use that, but it doesn't work anymore. I don't know. You mess with one setting and it screws everything up. And that's just because you have to work with OBS audio and your computer audio, and then you still have to, get the audio to go through to YouTube. So anyways, technical stuff aside, let's talk about the stocks. So we're working, so it doesn't really matter. I was saying to you that rally that you're doing fine, and like that guy that came on was just a mess. Like I hate to say like amateur, but just like very typical non-technical like AMC trader who just kind of wants everything to run and just talking about buying and holding. And there's nothing intrinsically wrong with buying and holding a stock. We got a little flack from that because of what's happened with AMC for sure. And I think anybody who's under the illusion that this has somehow like been a great play is just drinking the I don't even know. And the poison, I don't know. There's a lot of people out there who seem to believe that the nature of buying and holding is enough. It is a big part of what causes short squeezes, because not allowing shorts to cover, right, and buy back their stocks because nobody's selling would cause a squeeze to be exponentially greater. That's a technical case for a short squeeze. And that's what Deep Effin' Value and the Roaring Kitty guy was recognizing, was that in the event of a short squeeze with enough pressure and with people just buying up the stock only and not selling, you could definitely cause something like that to happen. But we're way beyond that with AMC. And I think there's this kind of myth and mythos out there that it's just a powder keg that's still waiting to explode. I do think there will be a time for AMC to have that markup phase. But the amount of money that's been poured into AMC on the opposition side speaks volumes. No pun intended. Because there's just been so much that's been put against AMC over the last 2 years. And I don't care who you are, whether or not you are buy and hold, or you're just technical, or AMC is just kind of like a swing play, or whatever. It doesn't make any difference to me, because I think that the facts are the facts. And the facts are this has been in a long-term distribution for 2 years now. That's long, right? That's a pretty long term. That's shorts not playing short term. That's shorts playing long. And if it is a long that's going to step in, they haven't stepped in yet, period. So when we talk about operators, we're talking about people who actually have enough money to move the needle. And at this point, there is not enough. There's just not. I mean, I don't believe it. That's me. Sorry. I hate to be that guy, but I don't believe that there's enough people buying and holding AMC still. I think people are tired of the stock. And that's kind of where maybe the grind is here in this community, is that I tend to be labeled as this kind of curmudgeon who's like rallying against AMC. That's not the case. I own shares. I have shares that I've had since the big run up. I got in April, right before the second run up, and I've got shares from way back then, 90 whatever % loss now on those. And you average down, you do what you can. But there's still people that come in every now and then, and you get that kind of vibe that like they're not really interested in the technical case, and they kind of think it's phony anyways. And it wouldn't matter if I had a 75% success rate versus a 25% success rate. Like, they don't care. For those folks, it's just the buy and hold play. And this Discord group that we have right now is not really for those people, and that's not to be mean, but it's really for people who are interested in technical analysis. And I wanted it to be beyond AMC. So I'm still looking at AMC, but I'm also looking at the Russell, and I'm also looking at, for me, it's like I have other plays. Not a lot, but I have a few other plays that I look at, and then people share their other plays in the Discord group. So for you, Rally, you were getting kind of spicy, you and this other guy, but he really wasn't here for that reason. Like, he really wasn't a technical trader. He shared one chart in like the month he was in that group, and most of the time it was just, oh, we're about to fly, we're about to run. He's just kind of like a hype man, and hype doesn't do anything. Like, that's not what this play is about anymore. There's been plenty of fundamental changes to AMC as a company that have been all positive, but the company is still running on fumes, and you can disagree with that if you want to disagree with that. That's fine. Bottom line is the financial loss. I mean, like, we've improved year over year in losses. Does that make sense? Like, we haven't made a profitable year, so we're losing less money every year, which is good. That's positive. So like the trends of AMC as a business are positive. That's the facts. But it's still negative. Like, that's also the facts. So I've been waiting for a while. I just kind of spieling about that because I've been waiting for a while for a long operator to step in and reverse the trend. And again, like, you can argue all you want about this and that, but that's it. We're kind of just stuck in this downtrend. We've never reversed it. We've had hints of that. We've had times where it's gotten really close. We have pushed the creek on the macro a couple times. The biggest one being that July push to $8 right before it dumped, which very few people could have traded. And we got the $6, I think it was, or whatever, but before it reverse split. That pushed the needle. But at the end of the day, it was a massive distribution. It was just a huge upthrust, and we ended up dropping some 50% or some ridiculous numbers. So from a fundamental standpoint, there's some good videos. I know that somebody posted in the group, I thought Tony DeNaro, I thought he was out, because I remember him saying, like, if this thing does the reverse split, I'm out, or something like that. I mean, maybe everybody does that at some point with AMC, but somebody posted this video, and we've had some people talk about it, and I think that it sounds like it's pretty grounded. And he doesn't know me. I don't know him really, so it's not a pitch to like boost his channel or anything. But I have watched some of his stuff before. A lot of people don't like him. They think he's like against AMC or something, or he just talks about stuff like I do. He's very straightforward. Like, I don't feel like he's a hype man. But maybe it'd be worth watching it. I was talking about Rally Your Line. It's a lot like some of the others we have. AMC's undergone quite a transformation after this reverse split. And I think Your Line is good. I don't think it's the only one, but I think you could represent it. It could be representative for you, and it probably is accurate enough that it works, right? As a pretty important creek line, And I've got a couple that are like that are very similar. I'm not going to talk about Discord or anything else on this stream right now, but I just wanted to point out that there's nothing wrong with your chart. I think your line is fine, and it's probably working pretty well because it's a good one. I mean, that's all there is to it. And the guy was saying like, oh, if it's a 4-hour chart line, it won't matter on the micro. And that is a false statement, because it may not matter as often on the micro. That would be an accurate way of putting it. But it absolutely will matter, because at some point, those kind of short-term trends will meet up with the long-term trends. That always happens. So at some point, it will be relevant. It may not be relevant as often, but it will be relevant at some point. So once it becomes relevant, it's relevant, period. I mean, from a technical standpoint, if you hit a 4-hour trend and it can't break it, then it's relevant, right? Like, that's a big deal. I don't know where he was coming from saying that it somehow wouldn't matter. Like, that doesn't make sense to me. That's like saying like a moving average on the daily doesn't matter on the short term, which doesn't make any sense. Like, of course it matters, but it may not matter as often because you may not be there. Like, for example, I'm on the 4-hour right now, and you can see that the 180-day moving average, I'm on the left side of the screen here, and I'll switch this up here and there. Here, I'll make it bigger for now. That this moving average doesn't really make a huge difference to us most of the time. We're just kind of beneath it, right? We're not really testing it. If I go down to 2-hour, you'll see that moving average suddenly shifts down, and yeah, it matters more often. And that's the nature of all those kinds of trends. So if I'm looking at something like a moving average or a creek line or whatever from way back, no, it's not going to matter all the time. Like, there's months and months and months here where this particular creek line that I've drawn, which has a massive M cross, right? I'm not ignoring it, but it doesn't really matter that much. Like, it mattered the most back here in February of 2023, which is a year ago now, and now it matters suddenly again after that like really long stint. And I know my charts can get really messy. I need to clean them up every now and then, and sometimes I just don't get around to it because I'm working another job now, and it's harder for me to make time for it. But even before then, I still was kind of messy charting, right? This to me would represent something similar. Like, it's a line that matters because once it does get there, it's very, very relevant. And at the end of the day, you're not going anywhere unless you can jump the major trends. Like, it's just not going to happen. So I wouldn't hold on to that forever. I would just kind of let it go, because everybody else that knows technical analysis is on board with what you're doing, and you don't have to worry about it. So that guy was not really a good fit for our Discord group, and I think he figured that out, that people weren't like jumping on the bandwagon with him to trash talk, so he just left. And he probably was not happy either that the price wasn't rocketing, because he said every day for the last few weeks that it was going to rocket. And I've been talking about coming back down into the threes, and he was like, that's never going to happen, blah, 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 and then it happened. And it happened after hours. And at this point, we're kind of in that position where we really are looking at the same thing we've been looking at, which is either this distributive action or a spring action. And I do think that the top was distributive. I had people in the Discord group that were earnestly disagreeing, that one guy being one of them. But there was other people who came in and said, I don't really see what you're seeing, Booksy. They said, I don't get why you think this is somehow distributive up here. Distribution is completely relative, right, to whatever range you're talking about. So if I'm talking about the short term right here, these two tops, 100%, I knew they were distributive. It's not a question in my mind. Whether or not it ultimately breaks down, that's a bigger picture. Like, that's the bigger picture. So you can, again, say what you want about disagreeing about this or that, but I'm sorry. Like, I don't need to, I feel like I don't apologize, and I didn't apologize for that analysis. So it made people mad because it just does. And it's not everybody, but it makes a few people every time mad when you say, well, that's a distributive top. I don't get it. It's not personal. I don't want it to distribute. I don't. What I do want is I want to try to convey what I see as accurately as I can. And if you don't know why this looks distributive, I don't know how else to tell you this, but you probably should go back to the basics because it's pretty clear cut. These two tops failed to make higher highs, and the vast majority of the volume came right at the peak and shortly after. And it's not a question in my mind because it's really plain to see, and I don't know why that would even be an argument. Both of these are very distributive movements. You can see they project upward and then close low. So they come up above and then they sell off below. They come up above and then they sell off below what would be considered like the main resistance line. And then you have another one right here. And this is what I was saying about 475 repeatedly. They give you the map, and I'm saying they, but I'm really talking about institutional traders who are shorting this thing. They're giving you the information that you need. You just need to know where to look. It's not complicated. This is it right here. You can see in this previous area, I know it sounds like I'm being really defensive, but in retrospect, looking back, this is why I was saying I didn't feel comfortable giving you a 100% this is the way that it's moving kind of thing for the last 2 or 3 weeks, because this to me is distributive. You have a higher high, you fail to close above 5, really, and at this point, there's kind of this weakness that you can see, and I would zoom in and we could see the cat ears and all that. But this is the simplest thing, okay? Where during this run up and this big sell off with high volume, and again, I don't know where people are getting their volume from. Maybe it's different on your chart, but I said very definitively, because I feel it's a fact, when you look at this, where are the highest volume? Where is the highest volume in this range? It's at these two peaks. That's not accumulative, at least not at that moment. That is distributive. That means that when you are hitting resistance, a ton of sellers are coming in. That means that no matter what's happening here, whether it's covering and they're buying back their shares and then re-entering, it is weakness. You are going lower consistently. Now, the reason that things get kind of dicey after that is because then all of a sudden you have some support here from buyers. But look at the volume. It's super weak, right? And that's the problem. So that's a problem for analysts, because after something like this where you have this hyperactive, very high volume, very highly volatile region, you have basically nothing. And in accumulation, that's often how it ends, is it ends with a kind of a whimper. You end up with this really low volume and then it pumps. But this is the catch. Distribution has high volatility and usually has those high volume sell-offs at the top. So here we have paired in this range 2 conflicting statements. You have high distribution probability here and here. It's super straightforward. But then you have this very, very low volume, boring area down bottom, which holds support and just kind of goes sideways. It's a lot more like an accumulation at that point, because typically this is an area of holding. A holding pattern like that is typically one in which you're trying to, I wouldn't say avoid anything, but you're trying to basically prevent, well, it is avoiding. You're really avoiding a breakout either way, so that you can do whatever trading you need to do. It's more typical to see this kind of stuff, and hear me out, it's more typical to see this kind of stuff in an accumulation. Do you see this kind of stuff in a distribution? Yes. Where do you see it in a distribution? It's called an LSPY, and it's basically like these little stair steps coming down. And that's where you have really low volume buy-ins, right? And then they're continually being knocked down. And it's honestly, if it is a distributive range on the big picture, not just in this trend, but on the big picture, this is where you have shorts who are re-entering their positions. It's like when you're walking up, it's no different, and you have people buying back in as there's pullbacks. So those are bear flags, right? For those that aren't into the Wyckoff stuff. And that's all it's been doing. And I've been drawing these fans out because the fans are easy enough to see. You could take a fib fan from the bottom here if you want and go up to the top. And I'm sure if you dragged it down, these would be your Fibonacci markers going down. But you can see it like laying up and then it distributes, laying up and then it distributes, laying on this, then it distributes, laying on this, then it distributes over and over and over and over again. The greater, bigger picture question is, where is it going, right? And this is where I think people get kind of confused and where my analysis maybe lacks, because I have a hard time explaining. So I'll say all that stuff and you hear me say distribution, 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 distribution. And then you're saying, well, yeah, Booksy, but what does that mean on the big picture? Again, if this is an accumulation, this is a really good accumulation. You see how rounded this is? So weirdly enough, even though this area is very distributive coming down, it just is, we're not really making lows to the extremity that normally you would in a distribution. Because usually in a distribution, especially, you can see where we are right now, and we're going to have to talk about this a lot. This is what you would call like the ice. This is the area where you have the most support right after this initial bottom, okay? And at this particular junction, this is where you would normally see after you break the ice and fail, which is what we're kind of testing right now, okay? We are testing it right now. We're going back up. That's what this is up here, right? This morning or whatever. You're going back up to test that area. If it fails, this is typically where you're going to start seeing like a lot of sell-off, because that means that the buyers are weak, the sellers are ready to go, and they start taking it down, marking it down. Okay, but again, what does that mean for the big picture? Because you keep saying distribution. Does that mean it has to make a new low? No, because on the big picture, this is just a bounce. We haven't tested the low yet. We haven't even gotten there yet. Have we tested any supports yet, Booksy? Yes, 383. Where did 383 come from? Oh, there's a number of things, right? One is the initial support here. When we first came out from this dip, this is a selling climax followed up by a reaction, auto reaction. Look at where it found support. Now, did we come below that support? Maybe a little bit, and I think that's fair to say. Yeah, because this is 384. This dipped right beneath it. All right. But the point is like, have we tested that support? Yes. What about the bottom? Where did we take off down bottom? Probably around 361. I'm not going to zoom in and like stare at it on the micro, but I think it's about 361. This says 359, but yeah, maybe 359 is probably better. Take that back. But it's hard for me to tell without zooming in because we're on the 4 hour, so it could be that it's a little bit higher. I'd have to look. I'm looking back at these two, and it looks like it found support at 360. So again, it's like, have we even tested the lows of this range? No. So is the top distributive? 100% in my opinion, yes. I'm sorry. It just was, and I already knew that. I've been talking to people about it all week, for 2 weeks, 3 weeks, however long. Because again, where was the support during this initial run-up? This was near earnings. It was right here at like 375 or 475. If you go back in time and you look at the charts, I said, well, we're going to have to see what happens at 475. What happened at 475? We have a double up thrust. First one's stronger. The second one has less volume, and it doesn't come up as high. And then you have this big sell-off again. Second giant volume candle, right? And this volume candle right here, it's interesting too because this also looks like a lot of buying. But notice the wick on that candle. It just goes way up high. It's almost like it's hitting somebody's order at 490, and then it comes all the way back down. It's just pure absorption of that buying. There's almost no candle at all. It's just wick. That's not good. Like, that's absorbing the buying and in a selling action. So if that happened on the reverse, which is kind of what we see here, you would say that's a little bit stronger. But look at the difference. My goodness. Look at the difference in volume. Okay, so I'm going to switch gears just a little bit. And I want you to just notice, look at the difference in volume on these two wicks. So one of them is really high. One of them is really low. Notice the difference in the volume, though. Look at the massive difference. This is significant. It's not an insignificant indication of what might be going on. Look at the volume up here. All right. Look at the volume down here. That's a problem in my mind. So I'm not convinced that this is just going to take off and run unless it breaks back above what we've called the ice. And I said that if it breaks below 415, I don't think it's a great thing. We got a gap fill down to 408. That's kind of where we are now. There was a gap from back here, right? We've hit this support. At this point in time, we can look back and say, okay, fine. The top was distributive. It wasn't ready to run yet. Where is it going? Well, that was the big question. And in my mind, I'm thinking to myself, well, if it hasn't already checked this lower area, that's probably where we're going. So I've been talking a lot about potentially coming down to new lows. And specifically, I said it might even come down to mid to low threes. Okay, we're not there, Booksy. We're kind of holding at 4. Isn't that good? Isn't that strong? It could be. Volume isn't here yet. It's super low. So if a seller wants to take this down, short sellers want to take this down, guess what? It looks like they've been rolled the red carpet. You know what I mean? Like they don't have any resistance down here. There's no volume. Maybe that's a good thing if sellers don't jump on it. But until you get back above and you see that buy-in and then that confirmation hit, it's not a good thing. So in a spring action, you would see a high volume candle on the bottom, kind of like you see a high volume candle on these two tops. But you'd see it on the bottom and then it would basically evaporate. You'd have like no volume because sellers aren't jumping on it. So you'd have a high volume spike down that gets bought back up, and then you basically sit underneath support. There'd be no volume with that high volume candle because sellers aren't really there, right? The selling is pretty much done. And then you have a nice gentle rebound, and then you get a huge buy-in when the institutions buy it in to take it up. And usually there's a creek jump involved in that. So that's typically what we see in a spring action. I'm basically paraphrasing like Wyckoff terminology. If you want to go look it up, just go look it up. But we see it happen. And a good example of that is March of 2022. Like you can go back and look at that spring. So for me, I've been saying, and I'm not trying to be, again, like patting my own back here, even though I know it sounds like that. But I have been saying that I think it comes down to mid to low threes because I don't see why you make this move here and you don't come back to test it again and trade it. And you can see on the volume profile on the right side here, pretty much everything underneath 405 here has not been traded. Does that make sense? Yeah, it makes sense because notice that the only time we ever really traded down there was very, very briefly during that we call it like a selling climax. But before then, we actually had some support at like 401. So this is the area right here that has the least amount of trading. And if I'm trying to distribute on the top here, it's probably because even if I'm in an accumulation schematic, it's probably because I want to go back. There wasn't a whole lot of buying that happened down here. You know, this is kind of it. So for me, it's like pretty straightforward. If you see something like this, there's a strong chance that the market's going to try to come back to it. What happens in an LPS, which is a last point of support, that's Wyckoff's scenario. What happens is that there's not enough sellers to take it down or there's not enough interest to take it down. It's like both. So in an LPS, basically you make a higher low and you never make a spring action. It's Wyckoff schematic 2 or whatever. Okay? And what that happens there is that essentially the volume dries up and there's just not enough sellers. They're not interested enough and they're not willing to spend the money to take it down. They think it's ready to go because you're really not getting the sellers jumping on. So you don't go for that spring action. But that doesn't happen very often. Like it's pretty rare unless the stock just has like an amazing amount of buying volume. One example for that would be like our big accumulation that happened right before the June run up. I would argue that does have a little bit of a spring action, but it ended with a series of LPSs. And ultimately, like it looks a lot more like the first schematic or whatever it is, whichever one doesn't have the spring. So I feel like it does happen, but for AMC, it's usually got a spring action. And frankly, why wouldn't we have a spring action? Like we should. And some people are saying like, well, why isn't that the spring action, Booksy? Well, look at the volume. it's average at best, and it's below average at worst if you compare it to some of the selling that we got back in November. I mean, it's super low. That's a good sign in some ways, but it's not exactly what I would call like a definitive spring action. So I'm waiting for that big volume pickup, and it hasn't happened yet. I'm also waiting for some really basic stuff, which is the creek jumps, and that hasn't happened either. So when I'm looking at the creek right here locally, it's pretty simple. I just draw a line across the two peaks that we went. That's the UTAD kind of stuff up here. These up thrusts provide a pretty simple, straightforward creek. There's also a lower one. This is pretty typical as well when we're coming down. As often we create kind of what I call like the beak. And it's really just a parabolic type downward motion. You see how the creeks are being met here and there, but they're getting like steeper at the same time. And this is pretty normal. So at this point, like if I'm looking at this, did the move this morning breach the creek? No. Is it low volume or high volume? It's pretty low volume on the whole. Did it come back above the ice? No. I can tell you that there's a chance that it's a fake out, but it's just a chance. And unless you see something definitive like a break above 430s, and then specifically the high here around 435 or so, this previous little high with this plateau, unless that comes above there, this is not going up, and it's not that complicated. Like that would be a creek jump and a return above the ice. It's right here. Unless we get above there between 431 and 424, once that happens, then I'm like, okay, we may have jumped this local creek. Now we go for the next one, which is out here. And frankly, even after that, you're on the 4 hour, you're still looking at having to jump over that 180-day EMA. I think that that might be a bigger move, you know, like a more definitive buy-in type move. And that hasn't happened yet. All right. Everything here has been very, very like, I don't want to say distributive because again, maybe that's a little confusing because the top has been distributive, but like everything here has definitely been to drive the price back down to this lower region to try to get some more volume. Maybe for our benefit, maybe not, but I think more than likely for our benefit. Okay, that's my opinion. That's an opinion based on everything I'm seeing, because on the big picture, look at where we are on the 4 hour, right? If this were to drop, and you can see they're kind of walking it down right now. Unfortunately, we're pretty close to losing any kind of a deviation that we might have. It's a kind of a bummer, but it's like really on the edge at this point. I think it's pretty much like right there. Yeah, we still got it. That's a good sign. But if it were to drop from here, I'll be watching really closely to see what happens on RSI. If RSI makes a higher low and doesn't come below like 20, I'm on the 4 hour, by the way, just as an example, if it didn't come below like 24 and it made a lower, all of a sudden made a lower price action move, it could be very good, especially if you see that rebound. That would be a really strong indication that we're about to turn because we're low, right? And we did jump, in my opinion, some pretty major downtrends locally. As you can see here, it looks like a big M cross because I think that it is. So on the big picture, like, is it all gloom and doom? No, it absolutely is not. There's been a lot of, you can see the volume, there's been a lot of buying that's happened down here. But there's also a whole lot of stuff above that needs to be broken. And we're just not there yet. So, I mean, and I know there's dozens of different lines we could draw and look at. The two that I would think are the most important right now, maybe three, but the two that I think are the most important, and I've already talked about this one at length. One would be the big creek cross that we did going way back to 2017. Again, you have to do this on the extended 4 hour time frame in order to get the picture that I'm getting, at least. But you go all the way to the peak in December 2000. It's like right at the end of that year, going into 2017, and then you basically come through that top in September of 2020. There are alternative ways to draw it. So there's going to be people that disagree and say, well, if this is a creek, then it got pushed up here, so you should be able to draw it steeper. In which case, guess what? It's going to go down farther. There's going to be people that say that doesn't matter. The market cap is more important. It'll never get down there. I'm going to stick with what I've got until it doesn't work. And what I've got suggests that 3 was kind of the main area. There's also another really important jump that was made, and that's these parallel orange lines. They specifically haven't been retested, and they're we're right there right now. And it's the jump that we made back in May of 2021. Again, is it perfect? Maybe not, but I think that it's landed right on there, and we could be going for like a double bottom on that for sure. And that again leads you down to like the mid to low 3s. Okay. Well, Booksy, what if you're wrong? What if it does the LPS? Okay, then I'm wrong. But I just gave you like what I think would happen. It's not complicated. If it comes back above and it can hold between 437 and 416, and then it breaks out again above this creek, I think it's probably going to just take off. But if that doesn't happen, I don't see why we don't come down. Now, Bulkowski targets are different. Bulkowski's methodology is different. It's completely, I don't want to say it's antithetical. It's not to Wyckoff. It makes a lot of sense with Wyckoff, but it ultimately is about patterning and statistical analysis. And this is a descending wedge, which means like basically you are hitting against a wall multiple times. And it's very, very textbook. There's 2 up thrusts that form the top of the wedge. And then there's repeated like 1, 2, 3, 4, 5 or so hits on the bottom. Again, could this reverse and head back the other way? Sure. It's not out of the question. You can see it really easily. I think on the RSI, especially, you can see right here, there's been a clear wedging action down. For AMC, this is very typical of what's been happening, I guess, during the distribution cycles. I call it a lot of times like a curtain drop, where you kind of have this flattening and then it just drops. Eventually that won't happen when an operator steps in and said, yeah, this is good value. But regardless, there are 2 targets that you can derive from that. There's a breakout upward target. There's a breakout downward target. The breakout upward target for this, I measured it from back here. So that was before we actually dropped beneath the ice. So it's important to note that that target would probably change right now, because if we moved up, straight line up, and we somehow got there today, it would not be in the same position that it was in, I don't know, a week ago. So that target at that time was 516. I always ask myself, does that target make sense? Yes, it does, because 516 is the previous top. So that breakout target is 516. How do you determine that target, Booksy? It's the top down to the bottom multiplied by the breakout factor, which he gives on the website. It's a percentage breakout factor. So do I think it works? Yeah, I think mathematically it's a really solid way to get good targets. They're not always perfect, but they're good. Breakout down, I measured again back here, and I measured as a breakout down, like where would you go? And it's basically like a 50% drop from this marker. So if you took this and measured it out, so basically about a 50% decline, if I remember. And that gives you like 367. Does 367 make sense? And 50%, you guys are going to be like, wait a minute, that's not a 50% drop. I'm saying like as a percentage of this value up here that you measure out, not straight percentage drop. Don't hear me wrong. Booksy said it's going to drop 50%. No. I'm talking about a Bulkowski target, which is like, I'm saying it's about 50% at this distance. And it measured out to, when I did the math, it measured out to 367. And that also makes sense. Where's 367? You can't make this stuff up. And it's good because it makes me more comfortable using it every time I get a good target like this. Look at where 367 is on the liquidity. It's dead center high liquidity. So to say like institutions are targeting this or targeting that, it's easy to say that. and know it theoretically. To see it statistically and mathematically like kind of prove itself is a very good feeling. So if you don't believe me, you can go look at descending triangles on Bukowski's website, and yeah. So percentage meeting up is 64%, percentage meeting down was 50%. So if you take this value and you map out this value and it's $1, it makes it pretty easy, right? And it is almost exactly $1. So that's like a 50%, that's a 50-cent drop from here, right? And a 50-cent drop when I did it, where I measured it from, was at 367. You guys are like, that's not the same. Well, yeah, but it's like $1 and a couple pennies or something. I don't remember. And I'd have to do it all over again. And then this was like 64 cents or something like that. Again, from where I originally measured it, it's different now. Now it's lower. So it would be significantly lower. It may only be like 5 if it did go back up. That's just the initial breakout. That doesn't mean that the trend has to establish one way or the other. It's just saying like, hey, if you break this triangle down, there's a strong probability that you're going to get to this liquid center down bottom. So that's where I got those targets from. Not magic, nothing I invented, just doing the math, and then also knowing how institutions would think about liquidity and where they would want to go. So could I be wrong? Could this be a double down thrust that doesn't go anywhere? Yeah, we'll see. You know, if we got a drop today or tomorrow and it makes a higher low, let's say it hits like 390. This is just hypothetical. But let's say it dropped from 409 to 390 again, and it rockets back up, and now at this time it actually breaks through the ice again and it holds above 425. I think if you saw another breakup to break this outer trend, you would definitely see it move. And this is a substantial move. You don't have to know that that's the bottom. You don't have to guess. If you waited until just here, this would probably breach where the high liquidity is here. This is still a huge move. It's 15%. But if it did that after this reversal, that's really strong. Okay, and again, if you look at Bukowski's stuff, he talks about the double reversals. They're always stronger. So in the case of a reversal, not double reversal, in the case of a reversal pattern where it breaks down and then reverses and breaks out, oftentimes if you have continuation, or almost all the time when you have continuation in that particular instance, it's likened to a spring action and you get a really volatile move. And we already know where the 180 is up here, near 460 something. It would be significant. Okay? So that's all I've got for you on AMC right now. I'm looking at this, just kind of questioning whether or not we're going to get any kind of additional buy-in. I'm not really sure I like this present price action. I've been looking at it mostly on like the 4-hour time frame. I'm trying to not get too stuck in the weeds on any kind of higher time frame or lower time frame. But if I were going to look at a lower time frame, I might look at like the 15-minute. And then work up from there. So on the 15-minute, it looks like it is kind of floating, and it is high volume after that sell-off. You can see a lot of the volume pouring into this. So I've watched this and see if it hooks. A hook is very simple. It's just an action of coming back up and retesting a trend, and I don't think it's going to look at that at all. I think it's probably this guy right here. So we'll see if it pops up, and this would probably end up being a check on 413, 414. Notice that it's already checked that 1, 2, 3, 4 times, so it's consistently coming back to it. I am also noticing that we're not dropping below 406. That could be very significant as well. So I'm going to look at 406. So again, this is kind of getting into the weeds of it. I'm just going to go back real quick and take a look and see if that matters. I already know it did a creek check here, so that dip was also a creek check. If you're wondering, if you go back and you look here, you can see it went back down and tested that trend. So it tested that initial sell-off trend that we got after that second upthrust. You can see it jumped over it, did an M shape, which is unfortunately for us, that M was a breakdown, as you can see, and then it goes back to recheck that, which is pretty typical for sine wave analysis. Nothing really unusual there is what I'm trying to say. So yeah, I don't know. You go back and you look at it. This is probably your floor, this 406 area, maybe down to like $4. And it's where we basically found support on the original dive down. So could they be setting up for something really similar to what we've already experienced, like another dive down? Sure. And it doesn't take that much volume apparently. You can see last time it wasn't that much compared to what we've seen on AMC. So totally possible that we can get a second one of those. And it's setting up sort of similar. Like there was a little bit of a sideways action here on this kind of plateau. It took a long time and then it just dropped. And it was probably a reversal on this action too. So like an S-curve. That would be coming from here to here. Yeah, I don't know. So the way I would read this is more like that. And then this was the jump. But if I'm looking at an S-curve, it's hard to do these like looking at the future because you wouldn't know where that line is. But it is a pretty clean 50-50 from the top. So we could probably do that as well and see where that would be. It's just another way of doing something similar. So that's the same marker too. I know I'm drawing a lot more lines. You guys are probably annoyed by me drawing those lines, but it's really similar. So this ends up being a pretty significant point as well, this 481 area. And maybe it's just the line I already had, this guy at 475. So if it's the same and it kind of looks similar here, we're trying to do like a similar price movement, we might be able to kind of conclude I mean, I already kind of know the answer, but whatever. I mean, it's the same target, that 50-50 here. So I think this initial drop is probably a test. And if it fails, like we see that there's enough sellers down there and buyers down there, enough trading happening down there, that there's more volume to be had, we're probably going to drop to that low point again. I mean, it looks like a pretty clean replica of what we've already seen. So more of the same, I guess. Nothing really to say with the RSI here. I'm not really seeing any reason why it couldn't go either way, so that doesn't really help me. And then the moving average on the 15-minute, it failed to breach it this morning. Again, 418 was kind of where it was. That's also where I've got my current creek line, and so it sort of melted back down. And yep, maybe one more try, and then probably we'll see it drop. And if things don't go that way, things don't go that way, you know? All I can do is tell you what I'm seeing and what my expectations would be. This particular up thrust, down thrust motion could be indicative of like a smaller range that's forming. Because again, remember, we didn't really trade that area very much at all. So it could be that we're kind of formulating like a stopping point right here at that 384. So you might be tempted to say, which I just said it a minute ago, oh, it's just going to drop straight down. But it could be like this, where you see it kind of come down and then form another kind of fake out motion before dropping further. Or, which is pretty similar, or you get that big drop and then when it rebounds, it spends a lot of time in this area before anything else happens. Very similar, but I kind of get the feeling that might be why we're defining this range where we are. And then this would be the breakout point later if we got there. Way back up at 420. So I was talking to Stockfather a lot this weekend. I was playing IWM and I got in too early, and it sucks because my calls got like squashed. I got in a little too early and I should have known better. I watched this hook form and didn't get out. I was not listening to my own TA. You should always listen to your own TA. If you're confident about what you're doing, just trust yourself, and then that way if you make a mistake, it's your mistake to make, you can own it. I was not feeling super confident. This looks like a head and shoulder to me, and I was saying like, oh, it looks like it's going to break down. I had an opportunity to get out at 207. I had gotten in at like 204 or something. So I actually had made a little bit of money, but then I could tell like the IV was getting squashed, and I knew better going into FOMC. So I should have gotten out. At this point, we're basically at the exact same price as where I got in, but my calls have been absolutely destroyed. And those were early April calls. So I'm not like in a position where it couldn't rebound, but it would have to make a significant move. And on the big picture, why does this matter? Well, this to me is the best representation of what we might call an ETF that's pro AMC. And I wouldn't even necessarily say it is pro AMC. But as Stockman and I were talking about, it's kind of like this institutional trading of hands happens. And he was saying in early March, there's often a reshuffling of a portfolio. So the underperformers are sold, and then the ones that are doing well are bought. And that typically happens, and you'll see some sideways action. Not always, but you'll see some sideways action, for example, around this time of the year, seasonally. And for me, I'm looking at this like big picture, and I'm like, well, I don't know. To me, it looks like an SOS that happened up here and then a local SOS with a backup. It's basically like a rising cup and handle type motion. And I can't imagine if this breaks out that it wouldn't just fly. I still think 240s. There's some really conservative targets out there like 220s. But honestly, I went and looked at like, I don't remember, like Morningstar or something, like the aggregate of like some 60 some odd or whatever analysts. And the lowest they have it is like 202. So unless everybody's just completely wrong, this is what it looks like, in my opinion. I think it is a breakout. And so I think you're going to see, if as soon as it can gain that footing and we're done with the shakeup, we should see it push. I'm very confident about this pushing at least at the 220s. My buy-in aside, because I may not even make that much money on it if I can't average down, and I'm not ready to do that yet. I still think this is a really good play. And what it would indicate to me is that small caps might be getting their turn. That could be an opportunity for a stock like AMC to maybe get a little bit of a run. I wouldn't call it a sympathy run, but if institutions that are that own shares in the Russell, for example, like they look at the ETF, right, and they're like, well, we'll buy into all of these different. Does that make sense? Like you're kind of buying a piece of all of these different companies. AMC might be one of those stocks that gets that boost if it's seen as like a low value. That bothers me a little bit because I've been reading really conflicting information about AMC. I don't know what to believe just yet. There are some people that still think AMC is way overvalued. And I think what they're using, and maybe rightly so, is they're using the debt to income. They're using assets versus liabilities and how the liabilities still far outweigh AMC. So AMC should not be at $4 according to those people. And there's a lot of good information that you can read about it. Me personally, I kind of felt like AMC was undervalued because it's already undergone a reverse stock split, which means if the reverse stock split hadn't happened, we'd be sitting at pennies right now. And I don't see how that could possibly be, and I'm looking at the balance sheets and all that. I still don't think that's completely overvalued or something. If you had said that at $72, sure, I'm like, yeah, it's overvalued. Of course it is. That didn't matter at the time, and it won't probably matter when this does have a technical break and you get that buy-in in the short squeeze. But I've heard a lot of people kind of parrot this in the Discord group. They'll say like, well, there's no way AMC could ever have a market value of 200 million or market cap value of this or that. But the company, I understand it has a lot of cash on hand. It's a big deal. But the company is still like underwater when it comes to debt to income. It just is. It has too many liabilities. Like, it's too much. And if you look at a company like AMC, which basically rents all its properties for some reason, I don't know why they do that. And as far as I can tell, that's the kind of the MO that they have. They don't own like real estate. It's not like your Cinemarks and stuff. As far as I know, I could be wrong. Correct me if I'm wrong, okay? I'm all right with being corrected about this. But as far as I know, like Cinemark has bought its properties. Like it owns its properties, does not have an outstanding huge amount of debt. It's in a much healthier place in terms of like cash flow to exit flow. So I'm kind of wondering what AMC is really doing outside of just trying to increase their cash flow. And I don't understand. I still don't really get the whole gold mine thing. They still haven't brought that up in like forever. They're just kind of like, oh yeah, we have this thing on the side, you know. And I already talked about how I feel about their distribution stuff. But anyways, I don't know. You know, is AMC a winner or a loser stock at this time? I've heard very good arguments for both. I'm undecided. Yeah, Sergio, there's no volume in that first one. So. Roadrunner, so they test the water to see if they find followers to sell, but if they don't want to take the risk and buy back what they sold. Buy back what they sold. Yeah, sometimes. But you have to understand, like, it's not one institution. When we say they, we're talking about the Wyckoff term is composite operator because they're talking about a bunch of different operators. And there's usually one or two that have the most money who can actually move the stock quite a bit. I call them the emu or the alpha dog, but they're the ones that typically bite the hardest. And they're looking for shares. It might seem weird in this day and age because there is like an infinite number of shares, and I mean that's just kind of the way it is. You can just keep buying if you had the money. But it makes some sense that they would still operate the same way that they did, 50, 60 years ago, because what you're trying to do is have the most control, and control in the market is share ownership, right? If you're a majority shareholder, you have the greatest sway. And if you have the most money, frankly, you can move the needle the most. I can't sit here and place $1 million sell orders left and right. And it's just not going to happen. So when you're going about testing for liquidity, you are seeing how the market is responding to every move. Do I think that a lot of that has to do with algorithmic trading? Yeah, but it's programmed by people who understand like what they're looking for and they know what they want to see. And is it going to be all artificial intelligence in the future? Blah 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 blah. I don't know. We can make it more complicated by talking about all these little things, and I would definitely agree that it's worth talking about. But at the end of the day, it's also really simple. Like a Wyckoff accumulation is meant to give you a picture, for example, or a distribution is meant to give you a picture of like the bottom of a wave. It's the bottom of a movement. And so somebody who trades Elliott or somebody who trades just on trends, they're going to see the same thing. And really what you're looking for is that turn. What gives you an edge if you're looking at Wyckoff, supposedly, if you do it right, is that you could anticipate with volume as an indicator, you can anticipate fake outs. You can anticipate direction before it happens. Because you can sort of see what they're doing, what institutional smart money, quote unquote, traders are doing while they're doing it. Not before, but while they're doing it. Okay? And that's why when we look at stuff like this, and then you get that double up thrust with a high volume sell-off, it's a little bit straightforward for me. But then when I look at the big picture, it's not as straightforward because you have to then zoom out and say, well, that's one area of this range. What is the rest of it telling us? Well, it's telling me we had an initial support right at 403. Then we dove down for liquidity, and then there was a lot of buying that happened into earnings that got absorbed by sellers and promptly absorbed by sellers. And now we're working our way back down. Why? Well, again, I think it's because there was a liquidity found down here. I mean, if you go back before these two sell-offs, where is the next kind of volume hill? It's like right here. You know, back in February. So that's like where the volume was down in this lower area. But we didn't trade there very long. And the market's always looking for supply and demand. If you want to think about it like a guy walking down the beach with a metal detector, you know? And you've got the beeping sound, and as you're getting closer to something, you're going to go for it. You know, you're not trying to walk away from the beeping sound. So I don't know, that's maybe a bad example, but it makes sense if you just think about it like from a esoteric kind of way of being. Like this is the way that supply and demand would work. Whether or not it's controlled and manipulated, that's another question. I don't care about. That's a completely separate question. I would say, yeah, it's controlled and manipulated, but like naturally you gravitate to where there's buyers and sellers because that's where you're going to trade the most. You don't go to regions where if I want to sell shares, I can't sell shares. Or if I want to buy shares, I can't buy shares because no one's selling. You know, it makes sense. So, you know, if you're trading in those large quantities, you're constantly doing liquidity dives all over the place. You're constantly moving up and down to try to find where the highest amount of trading is happening. There was a lot of trading that was happening here, but we didn't really test those lower waters. So is it a supply test? Is it a demand test? I would just say it's a liquidity test and leave it at that. And I think that what Wyckoff terminology and all that jazz is trying to do is help you to, not always perfectly because it's hard, but help you to sort of anticipate what might be happening because you can see markers that tell you we're kind of seeing a trend of selling or buying at these particular levels, and this is what this probably means. So yeah, are there people out there that are going to say 384 was the bottom? Yeah. I don't think it's definitive. I think it's very possible we still come down to these lower regions and we try to get to that spring. The good news, of course, being that, hey, if something happens and we see a massive divergence and it doesn't work out that we get down there and you get the turnaround, good, you know, then it's done. And you just kind of read as it is. I don't see why this can't be like an auto reaction and that we're going down to make like a phase B kind of bottom and then we'll see what happens. Or auto reaction, phase B top, SOS, early SOS going to a spring action. But I also could easily see how this reads as a redistribution. And that was my biggest fear because, and if you guys don't know this, go look at the charts. It's frustrating, I know. This is where you have to use the volume analysis as best you can. But a redistribution looks a lot like accumulation, and a reaccumulation looks a lot like distribution. And the bigger differences are always found in the volume between the two. But the charts look almost the same, and it's frustrating. But there's reasons for it, and if you go research it, you can read about it. I'm not going to sit here and drone on about that forever. So I think IWM, the Russell 2K matters. I've been talking about it. 2K, 3K, 1K, I don't care. Just the smaller caps. I think it matters, and I think that they're in a period where they might be seeing like a significant breakout. And if they do, then we're going to see a significant run in small caps on the market. Not all of them are going to be winners, though, right? And so one example is ChargePoint, which could be a loser. I'm not positive yet. I knew this one was really, really high risk. I knew that, and I've said it repeatedly. Like, I'm not convinced this is going to be the end-all, be-all kind of great play of the season. It's a high-risk play because EV manufacturers got kind of beaten up the last few years. They don't have all of them, not all of them anyways, don't have the best financials. There's more competition entering the market, which means that, hey, you don't have a monopoly on this anymore. Somebody might beat you out. And that's kind of how I feel about ChargePoint, what's interesting about ChargePoint is the very, very similar chart that it has to our friend AMC. It's got a lot of similarities. It's not the same, not identical, but very, very similar in terms of like where it's reaching these kind of long-term bottoms, how it's navigating those bottoms. The volatility is there for sure. In a lot of ways, it's reacting and acting more along the lines that IWM is drawing than AMC is. For example, while IWM was having that pump up and making, pushing barriers and making some new highs, AMC was dropping. ChargePoint had that pump up, like right here, along with along with IWM. Now, what happened on ChargePoint versus AMC is interesting because ChargePoint is also experiencing what looks like struggles. And it's doing so at this low value, and it looks really similar, right? You have this kind of like low portion where you found support. This would be considered like the ice. It's pushed back above, and interestingly, it had a like mini breakout here, and then it just distributed, and now it's had like the double distribution motion. It's still holding some support, but look at where they went. They went for that low liquidity and came down in a very clear-looking head and shoulder action. It's pretty similar to what we're seeing on AMC, where you've got this kind of low move and you're kind of driving the price back down. I find that comparison to be pretty valid, especially when you look at the big picture, because I noticed this a really long time ago, but ChargePoint has a lot of similarities to AMC in terms of like how it's moved. It's an interesting chart for that reason. Very, very similar in terms of the markdown patterns. And especially when those things have like taken off or dropped, really similar top here to what we see on AMC, and ultimately it's lost a ton of value. And then long term, I think that the trends are being kind of met now, or very close to being met now when we're talking about bottoms. So is it due for like an uptrend move back up to the fives? I think so. That's my analysis on it. That's why I'm in the play. So it's a very good play in my opinion, because you're talking about maybe $1, even if it went to $1.25, if it went to the low that I could expect, still a significant 300% gain if it does over the next year come up to 5. A lot of market analysts have dropped the target to like $3 or $2.50. So at this point, is it a struggle bus? Yes. Is it a good play? Maybe not. I don't know. I told you it was really high risk when I entered it on the Discord group. I said, I don't really know. It just seems like there's a great deal of reward if it can find a breakout. And it did. It found a breakout on the trend down. But then ever since then, we've been kind of like flatlining. And I think that there's probably a higher trend here that we haven't broken. We've been in kind of a bearish flag for a little while. We could look at something like this and say, yeah, if you extend it backwards, maybe that's the real trend because blah, blah, blah. This was just a distribution and this has more hits on it, yada, yada, yada. Again, does it really matter to me? No, because locally it still hasn't broken it. So, I mean, it almost is not an issue. It's kind of like apples and oranges at that point. It's still in the same position, basically the same line. It would need to break out and come back above 2. And I think, yeah, this potentially could be a decent runner, at least up to $3. I find it curious that it has such a similar chart to AMC, though, in terms of like where it is. The other thing about this is the volume pickup, because just like AMC, it's hit this point where you're kind of worried, like, oh crap, what if this thing like just falls into the toilet? It could be like a big S curve and just dump. Totally could. It's got a really high volume middle, though, and that kind of makes me curious. Usually in the S curve, we see a flatlining of volume, not like a huge peak of volume. So I'm watching it. I'm not convinced it's going to break out or do anything crazy just yet. To me, it looks like it could be bottoming. That's why I'm watching it. And I'm watching it with, again, the Russell just to see what happens. And speaking of that, so I think that this particular move right here is a power move that it came back above. They didn't announce anything unusual. Excuse me. They didn't really announce anything unusual at the FOMC. I read the notes based on what other people had seen, and so I didn't actually re-listen to it, so maybe my information secondhand is not the best. But some folks gave notes in the Discord group, and I was like, that's good enough. That's what I needed to hear. Basically, like, we're going to be looking at dropping interest rates, not yet, but in the future, we're going to have a few drops, and then maybe like less in the next 2025 or whatever. And I think that's normal, and we're going into an election year as well, which historically, people say like election years are really bullish, but I don't feel like that's necessarily the case. I don't see that trend that people are claiming to see. Maybe it's because of COVID or something, but you know, the idea would be that every 4 years you have a pretty decent rally. I mean, we had that COVID drop and it did rally, you know, into 2020 elections, but I feel like in general that might be a bit of a stretch to say like, oh, it always happens this way or that way. Because we can go back and look at 2016 and it's same deal. It's kind of like, yeah, I mean, it had a good year, but I don't feel like it's significantly better. It was after elections. You can see at elections, there's a big run. Is that significantly better than the following few years? Nah. I mean, it's not, there's nothing like, aside from the drop before and then the rally into it, it doesn't seem like there's anything here to me that would indicate that it's some kind of like a end-all be-all trend. So just be aware of that. Like, I think the same thing applies here in 2012. You kind of drop in and then same deal. Going into November, you got the rally in November. I mean, that seems to be the only trend I can see. So that would imply that if you were going to follow the same pattern, that sometime in early January, February, you'd have some kind of a drop, and then going from March till roughly October, you'd have more or less just upside. And then similarly to what we see here, I mean, it's all pretty much the same. Starts around March, and then you'd have a rally up until about October, and then there'd be a final drop before a push. It's the only real trend I'm seeing. So if that's the case, yeah, I mean, leaps on IWM would seem to be paying off this year. This would have to be kind of what you see this January, February period would be that pullback. And then you should have some kind of like a soft to decent rally going into, I don't know how far this is going to go, but I would imagine it could go to like pretty far if it really rallied. I mean, if it went beyond 245, you're talking about a massive push. I think what's more likely is that you get that pullback going into whatever. Did I say August? Yeah, I think that's what I said. Roughly through October. Yeah, and I've already got it marked off. So maybe something like this. I don't know. That's just a guess. And that's only based on what we've seen in the past. That you might have this kind of slow walk up during the year and then with some rallies here and there and pullbacks. It's not just a straight line. And then sometime around end of summer, you kind of have that pullback period. And then going into November, maybe you get the breakout. That's the only thing I could think for this. That maybe what you could, anticipate. But it seems like every single election year, at least for the last 4 or 5, it's not been like significantly different. It's just early year sell off followed by March, April, May. You start getting that buyback in, and then into roughly right before. And then you end up right before the election, and then you end up dropping and then taking off. Who knows? That drop could be the SOS. We could have a really good year. I think PNF wise, Stockfather's got like 220 on there. That this whole area, that seems really low to me. I think we're talking about the highs back at the 230s. That's what I've been looking for. So that's my expectation. But right now I've got short-term calls because I'm dumb and I was trying to play the the volatility after FOMC, and it's not really working in my favor. So maybe don't take my word for everything. I thought that we were going to see this pump and then it would just quickly pull back and go. And it could end up being that this is a much longer term slow grind here. we haven't yet retested the highs, so for all we know, we could still be in for a lot longer term sideways action. What I wouldn't want to see if I were looking at anything particularly, I wouldn't really want to see us come back down again below 204. But if we did come below 204, I would be looking at 203 to see if we check that major cross again. Maybe even lower. There's one right here that's pretty far down at like 200. The reason I was using the one that's higher is because of this push and the backup right there. You can see that it actually pushed up to 204, and then there's a really strong 1, 2, 3, 4, almost 5 or 6 hits. I think that might provide support here in the future if we did drop. So Yunhua says, more I see and read, the shorts seem desperate. I love ANC, not a fan of GME, but they released a fraud earnings report last Friday that was fake. Who did? And they are running out of narrative spin to fearmonger. Probably have to wait and see what dilution with debt restructure comes. I didn't listen to the Tony talk. You're more than welcome to go listen to it. I referenced it. I guess some folks in the Discord group recommended it because it's talking about debt restructuring. That will probably ease a lot of investors' minds. If the debt restructure goes through well and they have a good plan and it looks profitable, I think you'll see that price in to AMC. And it could be a catalyst moment. But, it's like anything with AMC. You sell the news. Sometimes what seems like good news to us has already been priced in. So it's just a debatable. I don't really like news because it's so misleading, especially in AMC. We get good news and the stock dumps, and it's always kind of paired with semi-bad news. And that bothers me a lot too. I'm jaded on it, I guess, at this point. I'm kind of like, whatever, So they may announce something really important and it won't matter, and then they'll announce something that doesn't seem to matter and it just runs. And it's like, well, I would assume that if the debt restructuring is good, that would be, and that they're going to be like, oh, we're going to kick the can and it's going to work out because they're going to give us till 2027 or 2029 or something, this particular person or whatever, or we've lowered our interest and all this stuff, and that's a big deal. I mean, the thing is like right now interest rates are so high, and any kind of debt restructuring, you're not going to get a great interest rate, and so anything that they can kind of lock in that's going to be lower interest for them over the long term is good. I'm not an expert on those kinds of things. The most debt I've ever had has probably just been home buying. So for me, like that's kind of my only frame of reference. I'm not in that sense like a business owner who's lent money, you know what I mean? Who's borrowed money against their business. So I would again defer to people who maybe know better about that kind of stuff, who understand the balance sheets a lot better. That's why I think I'm not necessarily pumping Tony's channel or anything, but I know he did a video on it, and I think the people that posted it in my Discord group are pretty trustworthy. So if they think it was fair and balanced video, I generally believe them. And so I will recommend it, not because I'm pumping anyone's channel or anything. It's just I think if it's good information, it's good information. Y'all are like, why are you so worried about giving Tony a boost? I'm not. I thought that Tony guy was going to get out of AMC. And whenever people say stuff like that and then they don't, I understand life happens. I actually did the same thing. I was like, I'm kind of done talking about AMC because it felt like it was never going to end. And it still feels that way. Like, oh, it's never going to end. Okay, so we're going to wait another 6 months or whatever. Like, you just kind of keep you dragging on forever. And I don't want to do that to people. And I don't think people want to be like kind of led around. And so I'm with you on that kind of stuff. And I feel whatever he's feeling frustration wise. I was just surprised that he's still making AMC videos. I wasn't even really looking for them. I think the debt restructuring needs to be very clear, needs to be very, very good for their company, and then I think we'll see some good stuff. That's all I can say about it. And that sounds like kindergarten talk, but I honestly think that's what people need. I think that's what's going to lure investors back. I think institutional investors are not really interested in AMC right now. I don't really see why they would be. Aside from like a community following, which is good because you want a lot of people trading that stock if you're going to be in it, and a high number of shorts, which is also good if you're an operator because you can make a lot of money when there's a lot of shorts in a play. I think that aside from those kind of basic facts, AMC as a company hasn't really done a lot to entice institutional investors to come back. They very much have pandered, and I mean that when I say pandered. Jab, 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 cross. I think they've pandered a lot to retail. I think they need to ease up on that a bit, and they really need to focus on getting institutional money back into AMC. And I think debt restructuring is a big part of that. It speaks the language of financial investors more so than just popcorn and, you know what I mean? Like, this weird news came out. Like, I went and looked it up and everything. Apparently, they like doubled the amount of popcorn in the sales because they closed a deal with like Kroger and Publix or something. I mean, two really huge grocery chains. And they found they're not going to get to provide that. And I think on Amazon Shopping. So they've like doubled the amount of popcorn that's in the sales. This news went on like deaf ears, though. It was like it didn't do anything to AMC stock. And I think it's pretty clear that institutional investors don't care about those kinds of things. Retail, I think we put a lot of emphasis on that kind of stuff because we see it as, well, I don't get it. It's a highly profitable, I think it's a huge profit margin for something like that. But I think, again, it has to do with the fact that they're not showing those numbers in those earnings calls. Instead, they're just wasting time talking about Twitter trolls. And I don't get that. Like, why not use that time to talk about the trends that you have with your popcorn sales? Like, where the heck was that information during the earnings call? Instead, they're talking about how the box office was crappier than ever and that they barely got by. And I'm like, I don't get it, AMC. Like, I don't get it. What are you guys doing? I'm sorry. I'm still bitter about that, if you can't tell. I cannot believe, I'm sorry. I'll stop. I really will. Yeah, that's pretty much it, man. I don't know what else to talk about. Do you guys have any other thoughts or questions for today? I'm usually not one for a lack of words, but kind of interested to know if anything I said to anybody like really made you think about something that you hadn't thought about before. Because like technical stuff we could talk about all day. Maybe that's not what we should always focus on, though, because I could sit here and just read the chart all day, and I think it's great. But there's probably people out there who are pretty good with the fundamental analysis who kind of roll their eyes whenever I start talking about it. They're like, Booksy, just don't talk about that. So I got a book, and I started reading it, and I haven't gotten very far. It's called Techniques of Financial Analysis, Practical Guide to Managing and Measuring Business Performance. And I've focused a little bit, I kind of jumped around. I focused a little bit on the EBITDA thing. Why is that so important? And it's earnings before interest and taxes. And then the includes some other thing. The in EBITDA. And it is important, and I think it's really important that AMC's EBITDA has been doing better and better. It's still negative, if I'm not mistaken, which is not good. Like, it's still not where we want it to be as a company. The picture of AMC as this kind of underdog could become true. I'm just worried that they're not taking, and I know this is silly because of course they're going to try to take those steps. They're not taking the necessary steps to avoid something like dilution as a way of raising capital. Like, that seems to be their big solution is, well, we can raise capital by diluting. And that's just going to make institutional investors think downside. Like, all right, well, they're diluting. So until they get out of debt, it's down, it's kind of that simple. I think for a lot of bigger companies, why bother fighting that trend, Somebody said that he sold and bought back in. Yeah. Okay. I mean, is it okay to want to be like a YouTube personality? I guess so. I don't feel like there's anything intrinsically wrong with entertaining. There's a lot of people who want to be entertainers. I think it's a little weird maybe to do it about finances if that's like your goal in life. But maybe it's just you do what you know. You can't do what you don't know. I mean, people do stuff about gardening and repairing cars and all kinds of stuff. I didn't have anything bad to say about Tony, though. I mean, like, when I was first getting into, like, the AMC scene, I found him to be a very, like, good voice. Because I've kind of always been in this, like, low number population of, like, less than 200 viewers or something. I never really got any higher than that unless AMC's, like, running and people go crazy. In terms of, like, live streams. But he originally had like the same kind of thing. He would have like 50 to 100 people, and that was it. And he was I felt he was very level-headed. Like, he didn't hype up anything. I don't know why some people don't like him. Like, I don't know. I get that kind of trash talk here and there, and I don't understand it quite the same as others. Maybe he's changed, but early on, it was kind of like Wrench Capital. It was like, you could go to those chat rooms and there'd be like 20 to 30 people in there, and it was pretty relaxed. And I like that. It wasn't like he was like a hype man, That's how I feel about it. Maybe something changed. I don't know. Yeah, fundamentals need to be debt-free. I don't feel like debt-free is going to be on the table for a long time. If we're only looking at debt to income for AMC, it's really hard for me to imagine us being out of debt anytime in the near future without substantial amounts of like share offerings or something. So, we're holding 8 million and we've got billions in debt, billions with an S. So it's 800 million is not a huge dent. Even if they just started paying down the debt, they're just like, let's just pay off 800 million in debt all of a sudden, which they're probably not going to do because they want that cash on hand. The cash on hand represents for Adam, he's said it a million times, Adam Aaron and his his squad, his gang. It represents security and the idea that you have enough cash in the case of an emergency, or if as these payments come due for debt, you've got that cash on hand. And that kind of flies in the face of the argument of bankruptcy for a lot of people. And I think that's kind of what he was trying to establish. But he butchered the stock in order to do it. And I think that's where people get mad. And he, for some reason, feels like he has to defend that like constantly. It's kind of already done. So he made a decision. And as he said, people voted on it. And everybody voted to have it move forward. And if you didn't vote, then you don't really get to complain about it. That was his argument in the last earnings call. It's like, hey, we voted on this. Need I remind you, you all voted that we would convert these apes and be able to pay down debt. And I'm like, yeah. Surprise, surprise. Was that his plan all along? Oh, yeah. Yeah, it was. I don't think it was Adam Aaron's plan to inadvertently cause more and more sell-off. Like, I don't think that's what he thought was going to happen. I think he knew there was a risk there. I really do. I don't think I've said Colin's name in a long time. But he was one of the first people that also vocally recognized that, like, this is probably just a big ploy to create a dilution scheme, like, so that he could get to, and scheme makes it sound like underhanded, but like get to a point where we could dilute again and do share offerings. I said initially that I thought it was a big ploy to get votes into the hands of institutions so that they could do something like that, and they did. So that was my thing. I actually got mad. I remember that. I'm just kind of reminiscing now. I remember getting mad at Wrench Capital because he was like arguing that it was this great thing and that we shouldn't buy, I don't remember. He was saying like we shouldn't buy Ape or something. We should let them foot the bill. And I'm like, dude, they're just trading out votes is what they're doing. And people were selling off like crazy. Well, no duh, you know. Of course they were. It's like scared money, and they were just capitalizing on it. They made so much money lending out shares on AMC. It's just crazy how you look back on it and you're like, yeah, it was kind of obvious, and we were all really hopeful that things weren't going to be that bad, and they just kept getting worse. But it was coming down the pipe for a while. I don't blame anybody for selling if they did sell. I don't really think it's my business at all. It's none of my business. It's just that the way in which public figures talked about things, the way that we conduct ourselves in that environment really does matter. I think it does have an impact. You know, if somebody goes viral for saying something, that's a lot of ears that they're reaching, and you're going to shift some opinions. So oh, I see what you're saying. Yeah. I just don't think that, I don't think AMC can let the stock run higher. I mean, even if they didn't dilute for a long time, at this point, it's always there. It's on the table. And you have to imagine that the short operators know that. So they're not going to just sit there and let the stock run higher without exiting positions. And that's going to cause less pressure on the stock to run higher. beforehand. I mean, like, so there's this kind of like lingering, and maybe this is where you could make an argument that AMC might have an upper hand, because in the event of a short squeeze, it would be really hard, I think, on the shorts in AMC's case, because they know that if the stock can run high, then AMC could do a share offering and make a huge amount of money and pay off debt. And that goes against their thesis, right? So maintaining control would make the most sense for a short operator right now. And I mean, who's to stop them? That's my question. It's not whether or not they have control. It's like, who's going to step up and reverse the stock? That's where retail gets kind of like stuck, because we don't have an answer for that. We just don't. Like, it has to be that institutional investors want AMC again. Now, that could be happening right now. You could be getting some buyback in. I don't think it's impossible. We could be seeing it happen ever since the reverse split. This is part of that bottom, right? We're forming like a huge bottom, and long term, this could be a huge shift in power, but that's not what a lot of retail investors want. They just want it to run, like, straight up. It's happened before. It could happen again. I've been more in favor of the longer term. That's just kind of my opinion about it. Longer term, slower turn. Like, big moves in the middle, but it takes a long time to kind of get there. So this is that move we were talking about earlier. You know, I'm looking at 2 hour right now. It looks almost like it could be a bottom on the RSI and turn, but just be careful, because it was 413 was the number. I drew this line earlier and said that we probably would see it come back up to this point, and that's exactly where we are. So, yay. What does it mean? Nothing right now. I mean, we're seeing a little bit of a volume pickup. It's still kind of low compared to the sell-off that we got. Unless we come back above the ice here, I don't really feel like there's much to talk about with AMC upside-wise. We need to come way up, like way up to like 424. Because we're still very stuck right now. This could become like a complex head and shoulder really quickly. And if it does, then we just kind of head back down. So you can't pay a dividend unless you're positive cash flow. Like, that's never going to happen for AMC until they get back to their liabilities not outweighing their income. Like, that's what a dividend, that's where a dividend comes from, is the stock performance typically. And paying a dividend is an attractive feature, but it's one of those things where you're not going to, like, why would they pay money? I don't know, like, I guess it's possible, but I've never heard of a company that's not doing that well to pay a dividend. It just doesn't make sense financially. It's a huge risk. You're just going to be hemorrhaging money that you need for your debt payments every quarter. I mean, look, I've announced that my last AMC video is coming up, and then I did another one. So I'm the same way. I think for me, it's not really about YouTube, though. I mean, it could be. I honestly think it's probably just my own weird obsession with the stock. And the fact that you're in it with other people is not a bad thing. I think that one of the things that are difficult, and it was brought up a lot by the case against Roaring Kitty, was him talking about a stock with people. People thought that that was somehow manipulation. But that's not, and he was fined, but it's not really fair because he worked at a fund or something, and he likened it to like cooler talk. You talk about stuff like that with people. And in these institutions, they've got hundreds of people working for them that are talking about stuff. I mean, I don't really get it. So it's a strange kind of legal thing, but I feel like that hints at a lot of human condition, that you can endure a lot of suffering sometimes if you're with other people, a lot more so than by yourself. And I'm not saying that AMC is all suffering, but this is one of those stocks and one of those stories that's going to involve a lot of that. A lot of people got wiped out, man. Wiped out. And I'm being honest, I don't put a lot of money into AMC anymore. I've bought here and there to average down some, but this is not one that I'm going to be telling my grandkids about forever and ever. It's not me. I'm more interested in just finding a way to make some of that money back and ride it as long as I can, but eventually I want to be off the wagon, I think there are better stocks out there. I really do. If I had invested the same amount of money that I've invested in AMC, if I had invested that in SPY back in October when I said I thought we were at the bottom, I would be very wealthy right now. And I'm not being a jerk about it when I say that. I'm just saying that's what I feel about AMC. It's kind of it's just this cash cow for these short investors. They're just stealing money from retail. And knowing that the market did what the market did and AMC just did not follow at all, it's such a slap in the face, to AMC investors. And I like movies, and that's part of the reason why I was attracted to this stock to begin with. It's actually the only reason. I didn't know anything about the GameStop stuff aside from what I heard. I had no idea it was connected to the AMC stock at all until after the fact. So everybody's going to have different stories. Maybe, I don't know. Maybe that's partially why I'm interested. I think it would be disingenuous to say that's not a part of it at all. It wouldn't be true. So GME. I haven't looked at GME in a minute. We can take a look. I was really hopeful that GME was going to break. Oh, that's interesting. That's a massive widening, huh? I was really hoping it was going to break and head to 50 because it's got a long-term trend that is a clean chart. I want to say it's here. Yeah, it's got a really long-term trend that it hasn't hit in a while. It's looking less and less likely, right? So maybe it will happen. Maybe it won't. Let's take a look at levels here. I'm probably going to have to check the weekly, so it'll screw up my lines. Let's just go to the weekly. Let's just start there. Yikes. It's pretty interesting, actually. $8.82. What does that mean for anybody? Nothing, Booksy. It means nothing. It's like sitting around like a goofy like psychic table. I sense the number 882. And then somebody's like, that's my third aunt's nephew's social security number. Yes, yes, yes. Now I see. Sorry. That kind of cracks me up. All right. Well, I'm going to chalk it up to like my line being a little off. I think. So this is an old support, and it runs back to where we had distributions happening in 2008 and then again in 2014 and 15 on GME. So there's also a very, very strong indication that this is where we needed to find some support early on. So there's two pretty major wicks here, but this one specifically. So this reminds me a little bit of like AMC's chart, because you have that initial breakout, and then it's this massive pullback, and then it's like, well, where is that creek at, right? It's kind of like, where is the support found? And it's found around 980. I'm looking back on it, and I would say that I can't kind of tell on this chart. Let me zoom in a little bit. It looks like that might be like a preliminary supply. So if I'm looking at this as like a massive, massive break. Yeah, right there. You see that? And I don't think this number is new. I feel like I've seen this number before, the 880s, for what it's worth. Like every time I chart this thing, I feel like I found that number. Maybe more like 9, just on the dot. Yeah, I think 9. That's where the buy-in happened. So there's two major buy-ins. One starts at $9 here. The other started way back at like 5. And both of those were probably the more significant. I think that these early ones, some of these early ones were like those ones where like Elon Musk bought, GME, and then it just kept like going. But this big one that happened starts at 9 right here, $9. It's possible, I know you're not going to like this, but it's possible that, you may not care. It's possible that if you look at the height of this, the amount that was bought here, it's possible that this is just like a full unwinding of whatever position was established. Now, I know you're going to say like, well, it wasn't a position, it was just a short squeeze. Right. But in terms of like, where did that begin? It started at 9. I think that's a pretty clear cut setup here. So the reason I did that, as I looked at the major trend and where it broke, there was an early dip beneath that trend in August of 2012, but I think that this is the major trend right here. And if that's the case, or this, one of the two, they're both pretty similar. One of them is definitely the trend. And I don't know why it'd be that one. I don't know. Maybe there's like a secondary one, because that is where it found resistance when it dropped. These both to me represent like I would say these three kind of represent the earliest trends that GME had as a stock here. And these are where it was broken down. So when you look at the walk down, if you're trying to get back to the earliest trends, that's probably where you're going to go if you don't want to be in a new uptrend. So let's take a look at this. Did I do this backwards? I did. I'm kind of talking through it as I'm working, so it might seem like I don't know what I'm talking about, but I'm thinking about how the stock returned back down to its previous. So what is this? 16, 19, 17, 15. It's pretty close. Anyways, so what I did is I took a 50% marker and I drew it across here, because in sine waves, that's often where you find the wave, is by dropping between, like the 50% through the wave provides you with the next wave. I know this has been repeated a lot on my channel, but I'm going to repeat it again, because when I say stuff like that, it might seem a little bit silly unless I kind of explain it. So I'm actually going to frame it a little bit like GME is framed right here, so you can see what I'm talking about. So this guy, it may not be the best way to do this, but this one, if you drive through like a 50%, what ends up happening is that the wave ends up making like a clear 50% drop on the wave angle, like across the wave angle. Right now this is flat, so it's going to look very simple, but sine waves don't always do this in the market. Sometimes they're going up, sometimes they're going down. But what we notice is that early on, this particular motion tends to have like a pretty well established trend. Like it's there, and you can, sometimes it's a little more invisible than others, but usually you can see it. And then what ends up happening is that later on, as you come back through, especially during like what we might call like an S curve, is you get like the major M cross like right through it. And this ends up being like where your S curve is, because you're going back down through what this trend had established as the trend. There was no initial hit on it. It's a major trend. And then this is where we get the hook. And this ends up establishing like that price action when you come back to the upside. This is what Stockfather wanted me to write a book about, because he basically was saying that like the cat ears represent, and they do, I'm keep screwing it up because my mouse is flipping out, sorry. But the cat ears represent what we see in the distribution stage of this when we get to the top, which is typically like you're meeting the wave and then you're failing to continue. Because in a accumulation, what ends up happening is you meet the wave, and then kind of like what happens here on the downward motion, you end up breaking out and then going up. And that would be in the case of like a reaccumulation, right? And so the reason this is really important and vital, at least what I've found, is that the cat ears typically do the same thing to the downside. So they give you direction as to where you might go downward. And again, 50% could look really different, because right now this looks sideways. But if the stock is mostly trending down, for example, this would look very different, because this 50% could look a lot like a halfway point, for example. Because you could have a wave here that's doing like this business, you know, and that 50% is like way down here, you know what I mean? It's like hard to describe it when it's just flat. So that's why on AMC, I think one of the most important lines that we have is the original cat ear line. I've never let that go. I never will let it go. It's super significant in terms of the overall movement of the stock, because in my mind, whether or not I'm right about anything else, the theory and the idea of the cat ears is specifically that they do establish a trend that you can then follow to determine, you know, where the wave is going. And I think it's established early on, way back here in this three or four peak area. There's another one that's much wider, as you can tell, and we did hit it later. We did come back to it, and that was like the short term August, and then later we hit it again in, well, it was August and then August again, basically. This was more like July or something, but so in my mind, I'm looking at this like, oh, well, we're probably in this stage where we're going to see this pump up and come down, and we're going across the bottom of the wave. And the cat ear from way back represents like a cross section of a big S curve. Anyways, point being, for GME, when you come back and you look at it, this is a little different than what we saw in AMC. But I would say that there's a couple different ways to analyze it. So you could analyze that upward motion, and it could be that this is sort of like that 50%, right? So that would be implying that, so this would be like that, okay? Where this is like the 50% wave, and then this is crossing over it, and it's only going to go down another 50%, and it's going to find some bottom. That's in the case of an upward motion. So that would be like if the wave itself, and again, I don't know why they don't do this, but that would be like in the case, like you have to like do it manually. It's really frustrating to me that like they don't have any kind of like way of doing this without an S curve. It seems really silly to me. Like they should be able to take the sine wave and turn it like at an angle. It should be a special sine wave tool that allows you to tilt it up or down. Like, especially with the market, of course it's going to move up or down. But it would be like this, basically. I know it seems a little wonky, but this is essentially what I'm saying. How do you describe this? Yeah, I mean, it is and it isn't. I don't know. This is super messed up. This would take me a while to draw. I know in my head what I'm thinking, but it's like almost impossible to describe it. I guess the way it is the way it is, you know? I don't know. I'm overthinking it. So often we'll look at that and see if I can find at the cat ears. So that's back here. This is a very clunky way of talking about this. This right here matters a lot because this is the original support line. So then you go back to current time frame and you're looking at, well, where does that hit? How is it crossing? And then I'm always assuming if it's going to be a sine wave, that's going to be like probably your midpoint cross. And it goes down to $9. So then I ask the question, does that add up? Does that make sense? Could $9 be a really important support? And the answer is yeah, because that's where the big buy-in happened on GME. It's pretty straightforward. And it does add up, so it makes some sense to me that that could be the case going down to 9. You know, there's other lines here, and that's the other thing is like I could take this and just kind of run with it and say, well, I don't think it's going to do that. I think it has to come down to $3. And the truth is that that's also totally possible, you know, because you have to look at then things like the wave and say, well, where is it right now? And we have things like the Fibonacci set up that you can look at, and you could say, sure, hey, look, there's that $8.63 or something, whatever it was that you said earlier that you changed, or it was like $8.80 or something like that. It's really close to maybe right there, a little higher. I don't want to like fudge it, but trying to get it right. Yeah, 887. Wasn't that really close to what we said? We thought was like 50%. So if I took this and I drew down to like 887, if I can get it there, does that meet that particular line halfway? Yes, it does. So at least for now, like I still think this is probably one of the stronger ones. And so this is a strong possibility. Maybe the goal here is we're getting RSI we're chopping it down. We're going to have one big drop, and it's going to hit that 887 and then take off. What else could that represent? I don't know. Maybe this right here. So there's the cat ears at the end, but then there's the one in the beginning. And if you look at the high here and you go to where we dropped, that could also represent pretty much the same level. So that could be another creek, possible creek line. This one is way lower, so this would be like a completely different setup if it dropped again. I'm seeing a lot indicating that 887 might need to be retested. And you can see why I think that might be a possibility here. I'll be honest though, when I look at RSI, it doesn't look great. Let me check it out. Yeah, it kind of reminds me of like that S curve down here as well. So those waves are like super clean, aren't they? I think we got it pretty close with our analysis up here. So it seems like July, August, October, so probably November 2024. That's your election time. That might be when you could expect this to maybe finally get to where it's getting to. That does not mean that it can't have an early breakout. It just means that for now, that could be where we might assume there could be some kind of a low. So by early breakout, I'm talking about a possible run up and then come back down. Seems likely. So you could have it, yeah, you could have it just kind of quickly drop, and that's that. Or there could be a substantial move to the upside in the short term, rally, maybe to come back and check the weekly moving average, for example, which is right here, if you can't see that. And then that could be a run up to like the 20s. And then you could drop from there all the way down to like 8. And that would be a pretty sufficient jump over the creek with a retest that goes low. And that puts you probably in a, again, pretty logical place. For example, if you were doing something like that, why not just turn it around right now? Well, that's all I'm seeing on the stock, so I don't know, man. RSI tells a bit of a different story than price action, so it's kind of a weird one, but I like it because it gives me a different view. Yeah, this sort of reflects what we were thinking about earlier, except this has that really low. This would suggest that you're probably again gonna have to find, I don't know, man. This reminds me a lot of a bottom too, and it did already jump that creek, so I think it's like anything, probably. If it comes back up and then it can hold support here, you're probably going to see it just take off, head back up. And if not, then I think we probably are in a situation where it just nosedives to the 880s. And that would make sense to me to some degree. And as a waveform, it does present an interesting conversation, because a lot of these don't even hit the low until right before. Like this hits the low price wise in this range, way far along the wave, and this whole bottoming section is just sort of sideways. So it would also suggest that maybe this doesn't even move till 2027, like a year from now. Because, I mean, this is really where the price hits a low, and then it quickly moves up, meets its target. And the same or very similar thing happened here. Looks almost the same. It really doesn't, I mean, the price technically hits a low over here, but it's very, very close to where that peak is. So yeah, I don't know. This is a lot more steady early on. GME is pretty different. That's in July, that's March. It likes the summer season. We could argue that it's going into it earlier. Both one of these have kind of like a bounce down. But it'd roughly be around here in October that you'd actually get some kind of a takeoff. And that's just purely on sine wave. There's nothing else. And again, that doesn't mean it couldn't have upside before then. This is a different time for sure. And I also wonder, like, if this was an SOS and it just pushed up above and it held high, because it's not going to go back down. Yeah, we might just be in it for the retest right here. And then you could see it start slowly advancing and then have the breakout. It's a little weird. But, excuse me, I guess my thought would be that 17, 15, 17. I don't really see a lot of reason to think that it couldn't come low because there are a few creeks that run real low here. The one thing that makes me think it might not is probably just the fact that it hasn't yet. It's been a long time, so you know, if you have this kind of a flag action and it can hold, you could be in for a very good reaction later. It's weird though. It looks like it's like flattened out, doesn't it? Like it's narrowing a bit. I'd say it's more of a flag than a flag. What I mean is more of a pennant than a flag, at least for now. Because it hasn't really had any hits low in a long time, so it's narrowing. The local price action was widening. I thought that was kind of interesting, because that usually happens before a significant move one way or the other. You know, the way in which this is narrowing does, again, kind of make me think that I might be right. Like, if we don't break out now, I can imagine this going down towards that point, you know, 880s. So I don't know. Stocks rarely do exactly what you think they're going to do. And I have a feeling that this early breakout would be pretty cool, or pretty good for an not cool, that sounds mean. I think it would be interesting for for a lot of reasons, but I think it could be a really easy way for institutional investors to kind of reload a final short position down and trick everybody and makes everybody think it's going to rally and just keep going. And it would be a really simple way to, but then again, you know, breaking this is such a significant motion that it makes you wonder if it's worth it. It seems like a high risk. High risk kind of movement. Yeah, I think it's debatable. I would put like if you had me pick one, I'd probably pick this scenario where it pushes up to like 20 and then dumps all the way down to like 9, and then it establishes a bottom and runs. And I don't think it would be until like 2025. It kind of falls in line with what I'm seeing on AMC somewhat as well, that there could be a midterm, you know, going into elections or whatever this year, you could have a bit of a rally. And then there could be a slump before a big move, slump to a new low. Another thing is that GME has had, if I'm remembering right, I think it's had pretty consistent timing. Let's see if we can find. I remember when I did a chart a long time ago, I was pretty surprised by how simple in some ways these time cycles were. Like, they're very simple, so they don't seem to deviate very much. So this would imply very similar price action to what I just described. So you'd have like down, and then you'd have some upward period going up for a while, and then it's just sort of waves. I mean, it looks almost perfect. It's very strange, isn't it? Yeah, and so you would be down in September and then start another rally. And so we might see some more upward motion going into the peak here with the possibility of a UTAD, for example. That would be like what happened way back here in October 2021. So going into May, you'd probably have upside, and then starting in around June, you'd probably start down again. So that seems pretty straightforward to me, but that's the way it's patterned out. But do you see what I mean? Like, you can't have upside here without breaking out. So I think this would be a very significant break to the upside that would probably be then followed by, you know, this kind of crashing action. Now that I'm staring at it, I'm starting to see something that reminds me a lot of what happened on AMC's bottom. Yeah, you see where that drop-off was? Here. I think that's where we would go. I don't know how high it goes. It may not go above 20. So I had it drawn pretty high, but I was thinking it was going to come up pretty high. But I think it could easily stop a little short of that. So if this breaks to the upside, look at that. Pretty clear. I think this could, if this holds at like 14, for example, we could see this pretty succinct like move up and then rally into May, and then a distribution that happens I know this seems like a lot of guessing, but I'm seeing a pattern here that might be really familiar to most of us. Yeah, and then bottom. I know it seems like that seems stinky though, because it's going to be like way over here. So where's that low? Way over by October of 2024. That's right before elections. And you wouldn't just go straight down. You'd have like a midway point. So let's say, for example, it went up to 19. Midway is 14. It's 1296. That's right here. It's pretty much right on this bottom. It's just a theory. I know it seems like a really steep drop. That's the other thing that kind of bothers me about this. Maybe it's too far. But I don't think it would be very, I think it would be really fast, like this. I do. And then I think we probably start seeing a rally. So this is November 8th. This is election time. Then what? Then you've got this massive move potential. So it's kind of like a fake breakout followed by a retest of those trends that it's been kind of creating on the upper part here, followed by like kind of a fake out downward. But that fake out downward would be your main spring action. And then you would recover. And then where do you go? 50-50 would be like back up to the top. That's a simple enough. Then another 50. How far does it go though? That's the question. 49. $40. It's really close to this. This is 100% estimation right now. It's not meant to be like, I'm just looking at it. It's possible. That could be your second major short squeeze. It doesn't seem like a lot. It's only 350%. That's a lot, but it's a jump. That's a big move. Of course, you know, if we're talking about like we were with AMC, this could end up being something where we don't actually get down that low till much later. And that's another thing that you got to think about is like, all right, Booksy, well, you have these opinions, and they're just opinions, but things change, right? And if you have this jump over a creek, who knows? You know, you could easily see that the high doesn't ever get above. You know what I mean? Like, there's just so many ways that this could play out, because in the end, let's say, for example, this took off a little earlier. Let's say it does a shallow jump here and it runs up, for example. You know, we could see an early run that then later is what brings us back down much later to like $8. And I could see that as well. So it's kind of a tough one to call right now. I would watch, I know I've went through the whole thing and just kind of piecing it out in my head. I think it's going to maybe try to make a run for 19. That might be a safe enough guess if it can break out of this 16 to 1550 area. I think we're going to see it push to 19, and then from there, I think it comes back down. Whether or not it makes a new low, that would determine whether you come down to that 890 area. I do think it's going to try to come back to 12, probably either way, and that would be after 19. So that would be kind of the point of contention here. And if we see a continuation, I think we go ahead and head down to 880s. And then after elections, you can rally. If not, and there's more sideways, we may not see that rally. You know, it could be this very boring kind of sideways thing too. I mean, there was always possibilities. Everything is possible, which is frustrating. But I'm just looking at this like, where do you want to trade? I feel like they really would want to get to this lower spot. You can see that was the early backup way back here down to 9. So it seems very likely to me. But there's just no telling, like, if you get there sooner or later. It's like the Wizard of Oz dude telling you which way you're going to go. So you're going to have two different creeks. The first is this top one, which is your top of your pennant. The second is after it breaks the top of the pennant, then you have to come back and retest it, and then you have to break out again. So you're going to have to do like a secondary breakout, and then you have to break that one. And that's about it. That's about as far as I'd go with that line of thinking, like this. Whatever. Whenever that happens. The price target at 40.45, that one's kind of interesting too, because that reminds me of the price target that we have on AMC. And no one's going to like this, but that's like us coming back up to 200, like 190. Y'all are like, why wouldn't I like that, Booksy? Because that was the target that I talked about forever as where I thought we'd have to come back. Because I didn't feel like we really tested it well. In reality, we did double test. I mean, we did do this kind of back up twice to that area, right? And technically, GME did something similar right here. So it's already been checked. So the question is like, well, why come back there? And I guess in my mind, like no matter what this is, the cat ears have that kind of double distribution factor to them. They always have like that push and then the secondary push. Even if this were to go down, and this is ugly, man, but even if this were to go down again later, I think the cat ears didn't make that secondary push. They got kind of squashed. And that's not quite the same on GME. It looks different. So on GME, it doesn't look like it really got squashed. And so I think it's more likely that that's a possibility. You're charting the trend pretty far back in time. How is that trend and liquidity levels even still relevant? Well, you tell me, because they are. They're relevant because somebody wants them to be relevant, I guess. Because stocks, long-term operators, they trade 3 to 5 years out. And they will change positions year over year if a stock isn't performing well. But how is that relevant? I just drew a line that like this was met. This is the trend right here from way back. This is where we broke down in 2016. And it was established as a current point of contention right here. I feel like I don't even need to answer that question. Like it's self-relevant. It's self-evident. I mean, not relevant. Self-evident. I mean, you can tell me where you think this comes from, but there's only one place that makes any sense. there's multiple things going on here. It's layers. You have, on the big picture, you have a pretty substantial case for one of two things: that this was either a spring action that went into an SOS, in which case you're about to mark up again, and that, if that's the case, this SOS is just a backup to the creek long term, which is somewhere around here, right? We're talking about this $8-9 area. It's pretty much where it's at. Or none of that's true. It's just a fluke, and we're just kind of waiting to see where it breaks out locally. But even if that's the case, it's the same thing. Like, it's not, there's nothing different about it. Like, okay, well, what's going on locally? Well, a couple of years back, this is a giant wedge. It's a narrowing price action, so you'd be waiting for it to break. How's that even relevant? Well, look, man, I don't know what to tell you except that once you get to the current time frame, like, it's gonna be relevant. I'm not gonna guarantee anything because that would be silly, but if I had enough confidence, I would say to you, I guarantee you when it gets back to this trend, it's gonna have some kind of reaction, because it's evident that they still care about it. Like, institutional traders still care about it. The market latches on to things like that, and it becomes important. And if you don't care about long-term trends, then the only trend that matters here is this downtrend, because this uptrend is long-term as well. I mean, this uptrend was, what, 4 years ago now? So why would we even be talking about GME like it has the potential to run? It's just in a downtrend, so it's just going down. That's not the whole picture. You know? I feel like, I don't know. That's a big question. I don't know. We could talk about that forever. But, because, I mean, lots of stuff happens on a chart. Like the reverse split or split. Those things can change a chart's dynamic. But I'm also of the opinion that long-term charts are probably the most important charts in the market, and that short-term charts are not as important on the bigger picture if you're looking at overall trends. If you're in a short-term uptrend, but every other long-term trend is down, like, it's pretty insignificant. If you're in a short-term uptrend and every other uptrend is up, you know, long-term, that could be very significant, especially if you're breaking out. You've got the support of the market sentiment, the whole market trend behind you. DWAC. Yeah, we can check it out. Why not? Digital World Acquisition Corp. That sounds like a made-up company. Yeah, like, every company's made up, Booksy. Yeah. I don't know. It's on the weekly. It's super overbought. Unless they stepped in some gold mine and maybe they got some kind of huge contract. I don't know. I'd have to look at news for that, but to me that looks like it's about to come crashing down. You might say, hey man, isn't that like a big cup or something? It's not horrible. It's been long term, so that's a good sign. It has had a breakout, which is also a good sign. But again, big picture, I'm kind of looking at it thinking, Last time it was up at these levels, it sold down, so it'd have to show me something else. Show me something that hasn't happened yet, you know. It's kind of interesting. That seems pretty relevant here. I don't know what this stock is all about. Trump. I mean, on the weekly, it's really, really oversold. So if it makes another high, for example, if it comes up, even if it came up again above the high at 59 or 60, that RSI is going to be really low. So it's going to be a massive divergence. Like you can see it's already climbed up most of the way and the RSI is really low. I can only tell you the technical side of it. If there's news behind it, could it continue to run and break out and start making new highs? Sure. I mean, it's in an uptrend. It's a little bit of a parabola, a little bit of a bowl shape. A little bit. This is a massive bowl. Yeah, it is. It doesn't really have, I'm going to have to look a little carefully. It doesn't really have the vibes that you kind of want to see in a cup and handle, because in a cup and handle pattern, this is bizarre to me. There must have been something that happened. In a cup and handle pattern, usually you see the volume kind of do what the bull's doing. So you have a higher volume on the right and then buy-in on the left. Vice versa. Sorry, higher volume of selling on the left and then buy-in on the right. I do see a buy-in on the right. I'm not dumb. I see it right there. But there's no like steady increase. It's just like all of a sudden it just goes and breaks out. Yeah. Even without RSI, I'd probably be looking at this thinking, it can't. It reminds me of like what happened with AMC, right? Where you have like this big move and then it reaccumulates and there's another big move. It's hard for me to imagine this just continues. I know that it's not even at all-time highs yet. This is a weird chart. Maybe it does get that extension up to like 90s. I think the RSI has already gotten there, but the price didn't. So if the price came up again to like the 90s and it made a lower high here, it'd probably be a very short friendly play. Like I think a lot of shorts would look at that and assume it's going to come crashing down, and there might be an effort to sell it down and dump it. So it's just where I'm at with it. That's what I would think. Seems likely. I want that to be parallel, but it's not. It's just not. So my thought is this could see an extension up, and then at that point I'd probably be looking for a pretty decent pullback. Man, I don't know. It's tough. Yeah, like 98. That would put it above the high here, 98.75. So it's still got quite a ways. I think it could push. Yeah, I may want to go. So if it's all about Trump, maybe it has to do with the election stuff. I mean, monthly is a tough one. You obviously don't have a lot of data here, and it's not oversold. Daily is cooled off a lot, so it looks like there could be plenty of room for upside. Weekly is where I'm looking at it thinking that it looks bad. It just doesn't look like, even with a push, I know it could go farther, but it's like, kind of looks weak. It's showing early signs of that kind of distributive action. Sell. Sell. Yeah, there's a lot of selling happening on the top. You've got kind of these horns. This bounce in the middle is kind of interesting. Looks a little healthier. So did it hit a low here? $31.90. Sorry. Any kind of stock that's only been around a couple years could be kind of tricky. I feel like gotta just be careful. All right, so there's no SOS yet. So what an SOS would be is like coming to the buying climax, like basically right up here. And then what has happened is that you hit a local bottom. There was a big push, but then a massive sell-off. A lot of that selling got absorbed and just got turned into a run. So a lot of volume. Probably some kind of news coupled with this. But it did hit the 4 hour and hold above it. So there's no breakdown yet. It's still in an uptrend. You can see it as well as I can. There's some pretty major gaps at 28 down to 18. Probably some more down here. I'm not counting, around 12. It's not the healthiest looking chart. There's a lot of volume in this push. I kind of like the bounce, but it hasn't shown really its strength yet. So we're just kind of waiting. So if I were playing it, I'm not, but if I were playing it, I'd probably be looking at locally that 51 level coming up to 59. And then if I saw it come above 59 and hold, I think you get another big push up to like 100 almost. It seems right. If not, if you get up here and you slide, you gotta watch really carefully. Or if it slides now and it drops beneath this creek, local creek here, I would be a little bit concerned, because the top is where you want to watch for the high selling, and so far we've got two big candles on either end. I can't really tell what's happening here yet, but it looks okay right now. It's kind of a mixed bag. If I were only looking at weekly, I would say it's looking kind of distributive, but if I'm looking here, this looks like it could still have quite a bit in it. I think it could still make a run up pretty far. It might be that you get both, you know, like short term, it looks okay. It's still holding above that 4 hour. I feel like if you get the SOS, probably going to 100. And then on the long term, it would end up, maybe it would still end up coming up, becoming oversold again. It would go pretty high, but then you end up with a divergent RSI or something, and that would be where it has a pretty massive pullback over time. Yeah, maybe this is the buy-in on a bigger bulls too. I mean, that's also possible. I was talking about it like from here to here, but what if the bull, the cup itself is not that shallow? kind of assuming that it's there, but maybe it's actually like farther, and we're gonna get to it's hard to say. We don't get to the top. Maybe the top's at 100, you know? And that's the cup. A cup and handle can be like at an angle. The reason I don't like that, though, is because it's really subjective. So some people would say, like, that is a cup, and it's going to make a handle now, and then once it's done, it'll break out. But the problem is then you have, like, the subjective nature of, like, well, what the heck is this, you know? And the other thing about a cup is that it's not supposed to be like a 50% retrace. And anytime people draw a cup and handle at an angle, getting that 50% makes the world a lot more difficult. So it's just challenging, because then you're looking at a 50% and you're looking at it like, well, it's got to be from here to here, but it's at an angle. It's kind of weird. I don't know. It almost puts it right on that marker at 29. Sure. So you could see, if you saw like a long-winded handle here, we could get a spring action. It says technically this hasn't come above anything. It just be like a phase B. And as a result, that's why I'm saying like a phase B is kind of tricky, because you don't have any real guarantee of anything. Because you could end up going sideways and back down and make a spring at 29. And that could be like a sort of a cup and handle. Propels you upward. Back to the all-time high, like 160. Kind of doubles as an inverted head and shoulder too, but all right, so long term, I'll summarize this. It looks like a pretty huge breakout, and this on itself, by itself, has the vibes of like a large scale SOS compared to the bottom region. The backup itself could be incomplete, and locally it has only entered really like a phase B. So in my opinion, I don't know if that's a spring action until you see it continue to make higher highs and get above 57. So at 57, I think you're in a pretty good spot to potentially invest back up to 100 or more. On the other hand, you know, if we see it come down and kind of create a longer term downward motion, I wouldn't be dismayed, because it could come down to like 29. I think that's a logical place to come back to if it does do this 1, 2, 3, 4, 5 correction or something, and then continue down. I wouldn't personally get in bed with Trump anyways, so sorry, not sorry. The guy's too volatile. I don't care what your politics are. I think anything he says could cause this stock issues if he's tied to it, so that's my opinion. I would say that about all of his companies and stuff. Whether or not he's the greatest businessman ever or whatever, I don't care. Like, he's very, very controversial. And anything he says and does can drastically affect his perceived worth and value, you know, from that perspective. So just keep that in mind. Yeah, it looks great because it just had this massive run up, but it could be that sellers are getting ready to sell more, you know. We just have to wait. You got to wait for the confirmation, in my opinion. So it would be above here. AMC. Well, that's all I got for you guys. I think I've been kind of down on AMC lately, and I don't want people to feel like I'm just kind of beating up on the stock. It's mostly just short term though. I really am like very very bullish on the long term. Short term, I'm a little bullish. Short term, I'm a little bearish. It's just simple. And it's not because I want it to go down. I don't. I do have a hedge position, but it's just a hedge for me. If it works out, great, and if not, oh well. You know, I'm not really counting on a particular number. I do know the Bukowski target is 367. It makes sense liquidity-wise that we would try to get down there. I couldn't tell you the timing of it, even if I wanted to. And an LPS isn't out of the question. So as much as I think we're probably going to get a spring action and come below 359, 357 or so, again, mid to low threes. I've been talking about that for a while. As much as I'd like to say that, meh. I wouldn't be surprised with the volume the way that it is. It's just not, no one's really telling me. This top was really distributive looking because it's obvious. But then when you get to these areas where you're kind of just lollygagging around and you're going sideways, it just takes a buyer or a seller to kind of push it, and it's just not really going very far. We are below what I consider to be the ice. That to me is confirmation more so of downside than anything else. But you just got to wait. You know, we could see this kind of quick double spring beneath this bottom and go. Because you have to also remember, and I've said this a couple times, and I don't mean to be confusing anybody, but this is a long and short-term setup. And right now, yeah, there were some short-term indications of downside, but you got to remember, like, this is where we found support in the range above, was right at 415. An example of that, if you're wondering, like, how could you separate the two and still keep your head, because it's confusing, go back and look at what happened in, what was it? The buy-in that happened in September. This was a little tiny spring right here at the very end. So even though this didn't have that really obvious double distribution top, it stayed pretty chill. It was more of like a wedge. It's similar. It had that kind of downward wedge movement. It never came back to the lows till much later, unfortunately, right? It came way back down later to explore that liquidity. But this ended up being like a dip that didn't continue it at the moment. So this was an example of one where you actually have a range form after this little bottom. And I wouldn't really include that, you know. It's like, oh, it had a selling climax, and then this is a reaccumulation zone. Does that make sense? Compare that to what happened on the secondary motion there, where it sort of sets up similarly, but this ends up being a really long-term LSPY, right? You come in here and you look at it now and you're like, well, you know, it's the same thing. We get that dip. So if it were to reach and come back above the ice here to 420s, that's where I'm saying, like, that would be a change of character to me to the more bull side. Otherwise, I don't see why we don't just come down. And I know this is going to be really irritating to people, but I also kind of think the same thing could apply, where if you happen to not go down now, you might come down much later. And that's where I think a lot of people also don't like it, because that's like kind of the antithetical to what I'm saying, because I'm like, oh, well, you go up. Well, I think it could definitely be a situation where you head up and then come back low. And we do eventually come back down, just like we did on that short-term example I just showed you. So we'll see. We're not there yet. I'll be pretty excited if we get a change of character. Right now, it's still kind of sitting beneath that support, so we'll see. Let it be what it is, you know? And if you're not interested in hedging, there's not really much you can do right now anyways. You just kind of have to wait on it. You could buy shares or you can just chill. And you don't have to buy anything. You could just wait. You don't have to take any action. You know, if it's a spring, it'll present itself soon. It'll pop back above the 420s. It'll hold. here, and then it'll jump the creeks, and then you're going to take off. And I do think you'll probably see a substantial move at that point, at least up to like 7s. But that's not a guarantee. So if it doesn't do that, you're really looking at kind of the opposite, which is you're trapped and you're going to take the price down low to get liquidity. Longer term, that could be better for us, because if you go ahead and get that liquidity now, that spring action, maybe we don't come back later. I would prefer that, but AMC has this weird thing about that, where a lot of times it pumps up really far before coming down low. It's done it constantly on this stock, where we get these massive runs only to find out that we're going to distribute down to a new low. So dangerous, I guess. All right, I got to go. I got some other stuff I got to get done today. Thanks for hanging out with me this morning. Appreciate you guys bearing with me with the crappy audio. And I'll talk to you later.